Today in the soybeans, the market was mixed, and by mixed, I mean we had some wild volatility. The trade agreement is getting closer, but nothing is really etched in stone yet. So the futures are finding some life early on after 4 days lower, and the market rallied. It looked like really strong. It looked like a new month, a new optimism. Everything was going well. And then, the markets just started to come in and sell off, and it was maybe like 12 cents lower with these soybeans. So the talk of the deal and the final draft really gave it a little bit of a spark, but once it ran out of steam, it was all over. So at this stage, we know that confirmation is a must. The market did come back and ended up just like a couple of cents, but this wild volatility will continue if we don't get any kind of real action coming out of this deal and get things rolling, because we're going to be working on the end of the month here when we're going to have the acreage declaration. So that's going to be something to watch for. Corn was lower today. The South American crops are doing well, really putting some pressure on it. Without any confirmed buying from China, these futures are going to continue to sag, and sag they did. They were down about 5 cents. The next support level here is going to be 363. We got down to about 367, 68, but then the market rallied back along with those soybeans. I mean, who knew? And I think it's because it's the end of the week. It's the first day of the month. We have a weekend. We've got to watch now for South America. If they're going to add to the competition that we're going to have, that's also going to put some big pressure on our markets. So we'll see what happens over the weekend if actually this deal is that close, because if it is, it's going to make an impact on the market, but we're going to have to watch that closely. Now the wheat was lower again today. The declining export demand really makes it so difficult right now. Futures hit an 11-month low. You know, the market's down about 70 cents in the last week and a half, which we haven't seen movement like that in quite a while. Demand is very slow, and these markets, it looks like they possibly carved out a little bit of a bottom, because it rallied back 15 cents before the close, still ending up down just 2 cents. So a little bit bigger market than we normally have been used to as of late, but this is going to give you a little bit of tell of what kind of volatility is ahead.